Welcome to Wednesday's Targets in Focus. I'm Elaine Stenson. The pound sterling has struggled to assert itself against the other major currencies over the past week. The pound has been hampered by the latest UK inflation numbers published during the early part of last week, which have led institutional investors to shy away from holding sterling-denominated assets. If the Bank of England doesn't have to tighten monetary policy, then why would it risk jeopardising Britain's economic recovery by raising rates? Today's Bank of England minutes will give market participants further clues on UK rates. Ilya Spivak, currency strategist with the DailyFX, joins me on the line now. Ilya, what are your 1, 3 and 6 month forecasts for the cable?
I'm looking for 159 in about a month's time. I'm looking for 155 in 3 months, 152 in 6 months. I think near term, we are looking at a situation where people have been a little bit bullish on the pound, but that is likely to turn as it becomes clear the Fed will taper, which is, of course, supportive for the U.S. dollar, versus the pound as the Bank of England remains on hold in very accommodative territory. And I think that is going to continue as a driving force over the next 6 months' time.
The single currency appears to be benefiting from the European Central Bank's decision to trim its key lending rate earlier this month, a positive action which is likely to support the Eurozone's tentative economic recovery in the medium term. Ilya, what are your forecasts for the euro-pound pair?
Looking at euro-sterling, I think we're looking for 85 in the next month as we get a little bit of a correction. But over the next 3 and 6 months, I think we're looking for 83 and then 81. I think that the ECB is clearly more dovish here than the Bank of England. The last rate cut that they've put out there is basically a nominal measure because market rates for euros are actually much lower than the ECB target rate. We've averaged about 8 basis points to borrow euros overnight for about 6 months now. So to bring the baseline rate from 50 basis points to 25 is not really significant in terms of actually providing stimulus. So I think the ECB is going to do more, whereas the BOE is going to basically remain on hold. So I think that is going to shift the yield expectations spread in favor of sterling and against the euro. And after a bit of a correction, we're going to see euro-sterling move materially lower.
And finally, Ilya, the Japanese yen traded close to a 5-year low against the pound. The yen fell after data showed that Japan's trade deficit soared unexpectedly in October as imports jumped. Exports also rose more than forecast. With this in mind, what are your forecasts for the pound-yen pair for the next 6 months?
I think in about a month's time, we're going to see a bit of a decline. We're going to see sterling yen come back to about 157. I think the reason for that is the Fed is going to start to taper, and expectations of that are going to start to firm into the year end, and that's going to give us some risk aversion, which is going to see the unwinding of yen-funded carry and see the yen strengthen. However, I think as we get through that and we see that the Bank of Japan is likely to remain very, very accommodative and likely introduce some additional stimulus, and as conversation of that picks up in the beginning of the year and we start to finally see that come to fruition somewhere in early spring, I think we're going to see 162 in 3 months' time and 165 in 6 months' time.
Ilya, many thanks for joining me on the line today, and that's all from me for today. But Darren McDermott will be back with more Targets in Focus on Friday. Bye for now.